Current market action for SMX Security Matters PLC is showing the stock trading live at $136.89 per share, pushing a massive intraday gain of roughly plus 18.01% at this very moment. If you are watching the ticker tape, you are seeing a level of volatility that would make a seasoned day trader sweat, with the stock swinging between a low of $120.50 and a high of $148.33 in just the last few hours. The sheer velocity of this move is what we need to talk about right now, because most people looking at this chart are seeing one thing, but the reality is something entirely different. The expectation, the lazy narrative you will see on generic financial news feeds or hear from skeptical traders, is that SMX is just another death spiral stock. They will point to the chart, which shows a decline of over 99% in the last year. They will point to the reverse stock splits, specifically the 1-for-8 split that just took effect in November 2025 and the massive 1-for-75 split back in July. The expectation is that this is a company on its last legs, gasping for air, and that today's 18% green candle is just a dead cat bounce or a trap for retail investors. But here's the reality, and this is why you need to pay close attention. That 18% move isn't just noise, it is a reaction to a fundamental shift in the company's operational reality that the market is only just beginning to digest. While everyone was fixated on the ugly reverse split history, SMX has been quietly securing validation for a technology that physically hard-codes truth into supply chains. We are not talking about a simple barcode or a QR code that can be faked. We are talking about molecular-level verification that survives smelting, recycling, and manufacturing. The reality is that the market is waking up to the fact that SMX just proved this technology works in one of the most complex supply chains on Earth, recycled cotton, and has secured a capital lifeline that could fundamentally alter its liquidity profile. The dead company expectation is colliding with the proven tech reality, and that friction is what is driving this explosive price action today. So grab your coffee, because we need to strip this down layer by layer. This isn't just about a ticker symbol, it is about the architecture of trust in global trade. Let's look at the immediate catalyst driving this price action. The volume today is telling a story of renewed interest. When a stock like SMX, which has a relatively low float due to those aggressive reverse splits, starts seeing volume spikes, the price action becomes incredibly sensitive. You have to understand the mechanics here. The reverse splits reduced the number of outstanding shares significantly. While this is usually a desperate move to keep the price above exchange minimums, and let's be honest, that was the primary reason, it also has a secondary effect. It dries up the supply of shares available to trade. When you combine a dried-up supply with a sudden injection of positive news, you get exactly what we are seeing today, a violent upside move, because there simply aren't enough sellers at the lower levels to absorb the buying pressure. Now, consider the broader sector momentum. We are seeing a rotation back into deep tech and industrial applications of blockchain. Investors are tired of ephemeral software plays. They want hard assets and verifiable infrastructure. SMX sits right at that intersection. Whether you're using Schwab Intelligent Portfolios or managing your own Fidelity brokerage account, you have probably noticed a trend towards supply chain resilience. This buzzword is everywhere, but few companies actually provide the how. SMX provides the how. The core of the bullish thesis, the reality that is beating the expectation, anchors on their recent breakthrough pilot. Just days ago, SMX announced they successfully tracked recycled cotton through every single stage of industrial production. Why does this matter? Because cotton is notoriously difficult to trace. It gets shredded, spun, dyed, and woven. Usually, any tag or marker you put on the raw material is destroyed during processing. But SMX demonstrated that their molecular marker survived the mechanical recycling process, the spinning into yarn, and the final fabric production. This is the holy grail for fashion brands that are under immense pressure from regulators in the EU and US to prove their sustainability claims. If a company can prove molecularly that a t-shirt is actually made of recycled material and not slave labor cotton, that is worth billions in brand equity. The market is realizing that SMX isn't just selling a concept anymore, they have a working industrial proof of concept. Let's take a step back and look at the company itself for those who might be new to this ticker. SMX, or Security Matters, creates a technology that essentially gives materials a memory. They use a chemical marker, think of it like a distinct DNA sequence, that can be embedded into solids, liquids, or gases. This marker can be read by a specialized reader, and the data is then stored on a blockchain. This creates an immutable record. You can melt down marked gold, turn it into a ring, melt it down again, and the marker is still there. You can take marked plastic, recycle it into a park bench, and verify its origin. This business model is fascinating because it addresses the greenwashing crisis. Companies everywhere claim they are green, but they can't prove it. Apple stockholders or Tesla stockholders know how important supply chain integrity is to those brands. If SMX can become the Intel Inside for recycled materials, the potential addressable market is functionally infinite. From gold bullion to plastic bottles, the need for verification is universal. However, we must address the elephant in the room, the financial health and the stock structure. The expectation that the company is risky is well-founded. They have burned through significant cash. The reverse splits, 1 for 8 recently and 1 for 75 before that, are brutal for long-term holders. If you held this stock 2 years ago, your position has been decimated. There's no sugarcoating that. The chart looks like a staircase into a basement. But in the stock market, we trade the future, not the past. The question is, has the bottom been found? The recent $111.5 million equity purchase agreement with Target Capital is the other half of the reality equation. This is a massive number for a company of this size. It provides them with a runway. It allows them to stop worrying about making payroll next week and start focusing on commercializing that cotton and gold technology. This funding acts as a floor, or at least a safety net that wasn't there a few months ago. It changes the bankruptcy calculus. When you see Interactive Brokers or Robinhood traders jumping in today, they are betting that this capital injection marks the pivot point, the moment the company transitions from survival mode to growth mode. Let's talk about the psychological aspect of trading a stock like this. It is a battleground. You have the shorts, traders who are betting the stock will go to zero, who are now potentially trapped. When a stock with a low float and high short interest gets good news, you get a squeeze. The shorts have to buy back shares to cover their losses, which drives the price up, forcing more shorts to cover. This recursive loop is likely a component of today's plus 18% move. It is pure mechanical tension releasing. If you are sitting there with your SoFi app open wondering if you should chase this, you need to understand the risks. This is not a set-it-and-forget-it play like an index fund you might buy through Fidelity Wealth Management. This is a high-beta, high-risk, high-reward scenario. The volatility we are seeing today, that $20 swing in price action, is normal for SMX right now. You have to be comfortable with the idea that this stock could be $150 tomorrow or $100 today. The reality is that the technology is verified, but the commercial adoption is still in early stages. I want to pause here and ask you a question because I'm genuinely curious about the sentiment out there. Comment below how many shares of SMX you currently hold, or if you're watching from the sidelines, tell me what price point would make you jump in. Are you waiting for a dip, or do you need to see more news? Now, let's look at the future outlook. What is the next catalyst? We need to see them convert these successful pilots into paying contracts. The cotton pilot is great, but does it have a dollar figure attached to a long-term deal with a major fashion retailer? That is the next expectation the market will set. If SMX announces a partnership with a global brand, think along the lines of a Nike or an H&M using this technology, the stock will likely react violently to the upside again. Furthermore, there is the Digital Product Passport regulation coming out of Europe. The EU is mandating that products have traceable histories. SMX is perfectly positioned for this. If they can position themselves as the standard bearer for compliance with these new laws, they move from being a nice-to-have technology to a must-have regulatory requirement. That is the bull case that makes the current price look cheap. However, the risk remains dilution. That $111.5 million funding deal likely involves the issuance of new shares, which could dilute existing shareholders. It's the classic double-edged sword. You need the money to grow, but the money makes each share worth a little less of the pie. Investors using Fidelity ETFs or mutual funds usually avoid this kind of dilution risk, but for the individual stock picker, it's part of the game. You are betting that the growth in the value of the pie, the company, outpaces the slicing of the pie, the dilution. The technicals on the chart are also signaling a potential reversal. After months of a downtrend, we're seeing higher lows on the shorter time frames. The moving averages are starting to curl up. For the technical analysts using interactive brokers trading platforms, these are buy signals. The break above the recent consolidation range is what triggered a lot of the algorithmic buying we are seeing today. We also need to consider the macro environment. With interest rates stabilizing, capital-intensive deep tech companies